Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if a company's spreadsheets are telling us secrets or just playing hide and seek. Today we're diving into a filing from SmartStop Self-Storage REIT Incorporated, and it looks like they're giving us a sneak peek at their performance numbers from late last year. Let's decode what this means for them and for anyone keeping an eye on them. Before we get into the nitty-gritty, if you like getting straightforward insights from these complex corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we break down these filings even further. So what is the buzz about this particular report? It is all about giving us some key performance indicators for their self-storage facilities. Think of it as a quick checkup on how their storage units were doing popularity-wise and price-wise at the very end of 2025, and how that compared to the end of 2024. Let's look at the occupancy first. As of the 31st of December of 2025, their physical occupancy rate was 92.1%. Now that is a tiny dip from 92.3% a year earlier at the end of 2024. What does this mean in plain English? Well, it means they were almost fully packed, but had a very small number of empty storage units compared to the year before. When you are already at over 90% occupancy, even a small change can be significant. It is like a popular concert having a few less people in the stands. It is still a huge success, but it is worth noting when you are trying to grow. Next up, let's talk about prices. This is where things get a bit more interesting. Their monthly web rates, which is likely the price people see online for their storage units, dropped from 97 cents per square foot in late 2024 to 91 cents per square foot in late 2025. That is a decrease. So while they were still mostly full, they were charging a bit less for those spots. This could mean a few things. Maybe they were offering discounts to keep occupancy high, or perhaps the market got a little more competitive, meaning they had to lower prices to attract customers. Following that trend, the monthly move in rates also saw a decrease. In late 2024, people moving into new units were paying 94 cents per square foot. By late 2025, that figure dropped to 88 cents per square foot. This reinforces the idea that they might have been using pricing as a tool to bring in new customers. Think of it like a hotel offering a cheaper introductory rate for the first night. However, there is a bright spot. The monthly in-place rates, meaning the rates for people who were already renting units and stayed put, remained steady at $1.63 per square foot for both 2024 and 2025. This is crucial. It tells us that while they might have been adjusting prices for new customers, they were able to keep their loyal long-term renters paying the same rate. This is a sign of strong customer retention and a stable core revenue stream. Renting storage units is usually not a daily decision, so customers who find a good spot tend to stay for a while. So, putting these numbers together, what is the story for SmartStop Self-Storage REIT Incorporated in late 2025? They were humming along with very high occupancy, which is great, but to either maintain that super high occupancy or to keep the units moving, they seem to have lowered the prices for new customers. The fact that their existing customers, the ones already in place, continued to pay the same higher rate is a really positive signal. It means their existing customers found value and were willing to stick around at that price point, which is a much more sustainable business model than constantly chasing new customers with discounts. Now, looking at these results more broadly, SmartStop Self-Storage REIT Incorporated appears to be navigating a competitive market. Their strength lies in their ability to keep their established clientele happy and paying consistent rates, a strategy that Warren Buffett would likely appreciate. The slight dip in overall occupancy and the lower new customer rates do suggest that they might be facing some pressure from competitors or a shift in demand. However, the stability of their in-place rates paints a picture of a resilient business with a solid base of loyal customers. As for notable risks, external economic factors that could impact people's necessity for storage or their ability to pay could be a concern. On the flip side, continued strong performance in their existing rental agreements could be a significant opportunity for steady growth. In conclusion, SmartStop Self-Storage REIT Incorporated is showing strong operational performance with high occupancy, but is employing flexible pricing for new tenants. The stability of their long-term tenant rates is a key indicator of their business health. Alright, that is our breakdown of SmartStop Self-Storage REIT Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they're playing a smart pricing game, or are we seeing signs of market headwinds? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord in the description for more exclusive content. Thanks for watching, see you next time.